episode 61 of Top of Mind with Consilio Wealth. Welcome back to the pod. It's been a little bit since we've chatted. A couple things have happened in the markets. I don't know if anybody's noticed. we had an election, and there was a widely predicted result by the market, I should say, that ended up happening. But the rest of the polls and whatnot said it was going to be really, really tight and be a coin flip. So we thought we'd unpack that today. We would unpack the Trump trade, just what happened since the elections in the markets, both on the buy side and the sell side. We have a lot of thoughts around buyer beware. Don't buy the things that you think will be good under this regime, and don't sell the things that you think will be bad. Just like in the last 4 years, if you did that, you may have not done so well. So we have a lot of thoughts around that. One of the big things that is a topic swirling is the Tax Cuts and Jobs Act, the TCJA. That is set to expire at the end of 2025. And with Trump's win, it's widely believed that that'll be extended and potentially modified a little bit. We talk about that. Inflation policy, inflation, just period. Immigration policy. There's a lot of talk of deportations, and I guess if I come back to inflation, regarding tariffs, and so we thought we would unpack a lot of information there. Finally, the FTC and the SEC leadership may change under this next regime. So we have a lot to chat through today. Lots happened in the news. Let's dive in.
Wait, before we get into that, can we explain why we had such a large gap between the last episode and this?
You gonna make me tell everybody that it's because I was gone?
Yeah, it was. I could have done solo, I guess.
Thanks for exposing me. Yes, I was in Europe for 2 weeks. We've been talking about on the pod. Europe's a great place to go this year because of the strength of the dollar, and so I finally ate my own cooking and went over there, and we had a great time for a couple weeks. And yes, thanks for exposing to our listeners that most podcasters would bring all their gear, microphone included, and just pod from the road.
No, not with a kid.
I didn't do that, did I? Okay. I see.
So with the exchange rate, did you feel like you were like a leg up? Did you feel richer, or did prices there adjust? Because I remember I went to Mexico a few years ago, and it was like the vendors all moved up the peso prices to match the dollar, essentially. So I wasn't getting any bargain, so to speak.
And I think that you would probably feel that more if you went and I don't know,
to the touristy places, right? Yeah.
Yes, that was exactly my point. Yeah, if you're hanging around touristy areas, you're getting $16 tacos or whatever, like you would in the States. But I think if you get off the main drag, you're probably not going to feel that currency bite as much because it's truly a local place. I will say that we didn't even really notice. So we went to Paris. We found Paris actually very reasonable and very affordable with everything that they offered in terms of like restaurants and that kind of stuff. Maybe it's because, I live in the greater Seattle area and you can't go out to eat for under $100 anywhere you go. We were doing that in Paris, no problem. And tipping is different. I liked that. That was nice. It's not kind of the like automatic shame 20% tip that we get here everywhere you go. It's like, 5, maybe 10%, or just a couple of euros at breakfast type thing. That was nice.
I looked it up. The euro is $1.06 US to €1. So it felt like it probably felt very level for you.
It did. And so, I checked my credit card after, right? And 100 euros, 106 or $109 or something like that. And so it was pretty close. And so, frankly, it was so close that I wasn't even really thinking about it. It's like, it's $100 or whatever, whatever the thing is that we were buying.
For reference, prior to COVID, it was like $150 or $1.50 US to €1. See, that's how it was historically.
So that's actually interesting because had I gone there, then going out to eat would have been the same price as it is in Seattle. We went to this one place. It was this like little family restaurant. You walk in and there's like a grill, like built in. It was like almost built into this wall, little brick oven. not a brick oven, almost like a barbecue type looking thing, but surrounded by bricks. And that's where they cooked your steak and your salmon and everything. Little family-owned restaurant. It was phenomenal. And, we got out of there with a couple of mains, an appetizer, some wine. I think it was 120, something like that.
With wine?
Euros. Yeah. Exceptional food. So I was really, and that's, the wine is, €8 for a glass or 20 or 30 or maybe 50 on the high side for a bottle. Here it's like you're paying $18 for that red glass of wine. It's half the bill, and there it's not. Anyway, we then went to Brussels. So we trained up to Belgium. We found it actually really expensive. Same exchange rate, same currency, but just the food was really expensive there. And then we trained from there up to Amsterdam, and we found that Amsterdam was more similar to Paris. It was more kind of reasonable, affordable, that kind of thing. Thought it was interesting because I read articles that said that Amsterdam was like one of the most expensive places to travel in Europe. And I didn't really find that. I felt like Brussels was really expensive relative to what you're getting, and Paris maybe the most reasonable, and then Amsterdam maybe a little bit more, but pretty reasonable. So, pro tip: we ran into one tourist trap. So we try to, when we go somewhere, we kind of just like sit for a minute, open up Google Maps, hit a search, and just like start pinning things. Like, hey, I want to go to that restaurant, or I want to go to that park, or whatever, and like based on reviews and pictures and whatever. I learned something. So we ended up in a restaurant in Paris. Looked pretty good. It was highly rated. And I was like, hey, there's a bunch of reviews. And we go there, and it was totally a tourist trap. Zillion people. It was totally overpriced. It was our most expensive meal there. And it dawned on me, well, if you have more than like 1,000 reviews on Google, it's probably a tourist trap. And this place had a few thousand reviews. I can't remember, maybe 5 or 10,000, 7,000 reviews, something like that. Everywhere else we went was, fewer, much, less reviews. And I think that's the indication of more local. So, pro tip that I learned, if you're traveling, don't skew yourself to a ton of reviews at a high, 4.7 star.
Yeah.
Fewer reviews, good rating, you might land on more of a local spot versus a tourist trap. So
yeah, we're different as a family. We crave the touristy areas. Like there's an energy about it, and we're tourists, right? So be a tourist. And
so you eat at Chipotle wherever you go. Is that what you're saying?
McDonald's.
You go back in Starbucks and you just go.
The McDonald's just to experience different country McDonald's. But there's again going off the beaten path works for a lot of people too. But again, imagine travel flip-flopping. Europeans coming to America. It felt cheap to you. It will feel the exact opposite for European. That's an exchange rate effect, if that makes sense to everyone. Mm-hmm. So, again, we went off on a tangent, but that's an important topic that we're going to discuss.
Yeah, that's good. That's good.
You love how I brought it back, right?
I love it. Thank you. Thank you. And on the next episode, I will come up with something to throw a dart at you too. So I'll be thinking about that next 2 weeks. Watch out.
All right.
All right, let's dive into the Trump trade. So, holy moly, the market reacted very strong. We'll see if it was too strong, but based on the reaction to the election, markets jumped pretty strong first day and the second day as well. It was like a 2-day pretty big rally. And we just wanted to unpack that a little bit and talk through what moved on those 2 days and the handful of days after, and what didn't move. So Hal, let me turn it over to you. Who are the winners so far in the markets that you're seeing from the date of the election?
Yeah, and I think the big thing is when we're talking about markets, it's like a moving target. It's always going to shift. This data I pulled at the end of last week, the week of the election. Today is November 15th at 10 a.m. Pacific, and the S&P is in 1.5% sell-off, right? So things are shifting quite rapidly. But yeah, we're going to speak to the initial reaction of the election, right? So the winner so far, small cap companies. The Russell 2000 was up 10%. Consumer discretionary was up over 10%. And then financial sectors, banks, insurance companies, up 7.8%. This is all relative to the S&P, which was up 5% in those first 4 trading days. Energy up 5%, 5.26%, beating the S&P slightly. Again, we'll talk about energy and how that we don't think that's a really great place to park money under this regime, right? Because for an energy producer, you make money when the price of energy is higher, right? So for producing a ton, I don't think that's a great investment when you have smaller margins.
You know what's interesting though? If you looked at the first Trump term, you would have said, I want to buy energy companies. They did terribly. If you looked at Biden's term, you would have said,
oh, yeah,
I probably don't want an energy company. It's going to be more green energy. You would have been 100% wrong in both of those trades.
Exactly.
And by the way, this is going to be a theme of today's conversation. So I just for our listeners, you can't try to outsmart the markets. The markets have their own agenda. You just got to be in. So we'll talk about this a little bit more, but I just wanted to make that point.
Yeah. Let's talk about some of the other non-traditional winners. Bitcoin. The Bitcoin bros definitely lobbied the Trump campaign pretty hard and stumped for him pretty hard. And they got their wish, right? They got what's viewed as a pretty friendly administration to cryptocurrencies. Mm-hmm. And Bitcoin, right? There's talk about establishing a Bitcoin reserve for the U.S. Again, I'm one of those Bitcoin outsiders that doesn't really see the underlying value of it, right? Like, they're supposed to attract gold investors, but what's the underlying functionality or the value of Bitcoin, right? So it is entirely, purely a fiat currency, but I'm probably going to get yelled at for that, but there's an underlying technology too, right? Yeah. That's the ledger. And that actually might enable a lot of different technologies, but I don't know the technology itself has any investable value. It's worth something, but I don't know if it's worth the trillions and trillions of dollars that everyone's making out to be. But here we are.
I think, just to jump in there, I think if Bitcoin would have become a viable currency option, we'd have to see some form of stability in the price, because it Correct. Is just incredibly volatile. You know, you could one day say, all right, let's say you're working and you're paid in Bitcoin. During the 2-week pay period, it could go from 100,000 to 60,000. Or in the week of the election, it went from 60 or 70,000 to 109 or something like that.
It topped out at like 90,000. Yeah.
I thought it pushed over 100, but you're probably right. So I mean, it's just like you can't have that level of volatility Correct. In your paycheck or your currency. So moving forward, we'd have to see some form of stability if it actually becomes a viable currency.
Let's bring it to real world practicality. You went to Europe. Imagine if you spent nothing but Bitcoin. One night you were in the Ritz-Carlton, the next night you were in the Motel 6, or whatever the equivalent is, right?
Yeah.
And that kind of fluctuation is not something that you want in a currency.
Yeah.
Right?
Can I come back to something here? So
yeah.
Consumer discretionary up 10%. It was actually the leader. And when you talked about the wins so far.
Look who's in it, though.
I guess
the top company in consumer discretionary.
Okay, can you share that for our listeners?
Well, that's not Amazon, but I guess the second one, Tesla.
So here's my thought. Well, here's my question. If tariffs were to happen, wouldn't consumer discretionary companies
it's
potentially raise
goods.
Prices? Exactly. and then they could. So the weight of Tesla is what pushed that up so much versus the potential tariff fears, because I know tariffs have potentially been priced in the market too. What are
Correct.
your thoughts just on why that was up so much?
Yeah. So this is agenda topic number 1, buyer beware. So some of the winners, right? Are you buying consumer discretionary in face of potential tariffs? This isn't a eco-friendly administration, so we're probably not going to see EV tax credits.
Maybe just for Tesla, but nobody else.
Yeah, that's going to go over really well, right?
That's going to go over well.
Yeah. They could easily do it. It's like you get a tax credit if your company produces nothing but electric vehicles. So
it's easy. And American made and all that kind of stuff. They could easily do that.
But the Tesla is still facing a shrinking business, right? Lots of competitors and waning consumer demand. Mm-hmm. Those are two things that really don't justify like a 30% run up since the election, right? Like that's a big run up.
We talk about this a lot outside of the pod, but if you're a Tesla investor, you're banking on something other than car manufacturing.
You have to.
Car manufacturing is a bad business. It's low margin. It's. I mean, just look at Ford, GM. Look at Rivian. Rivian loses tons of money, right? It's incredibly expensive to build this stuff out. Rivian has a kind of a rich valuation, maybe for what they are. So there's some stuff priced in there. But the fact that Tesla can maintain its valuation and its market cap relative to its earnings is Wall Street saying we are banking on something else coming out of this company that's related to more technology, whether it's
Correct.
AI, robots,
Yeah.
autonomous driving, something. And to the extent that that doesn't happen, the stock can't maintain its valuation. If it does, hopefully it can grow into it.
As long as Musk stays in Trump's favor, they'll have the federal government behind their backs in terms of pushing some of these new technologies forward or subsidizing them, right? SpaceX is a heavily subsidized company. So was and is Tesla. So government spending does funnel through Elon Musk quite a bit.
Definitely. I mean, he had a huge government loan to start Tesla.
Yep. And then
losers.
Next group, the next group, Bitcoin. Bitcoin went up 44%.
Oh yeah, sorry.
And then MicroStrategy and Coinbase, which are probably the biggest poster children for equities that are linked to cryptocurrency. MicroStrategy was up. I don't know why I changed my screen. 62%, 63%. And then Coinbase up 45%. And this is a matter of days.
You're running this. I mean, yeah, really just the spike. It's elections through November 12th or something.
Yeah.
Pretty wild.
All right, losers. Healthcare. And I think we're seeing more of the losers with healthcare, with RFK being nominated as health secretary. A lot of vaccine-based manufacturers are selling off today, but healthcare broadly, right? If you're looking at the campaign promises at face value, they're looking to overhaul our healthcare system, right? That's going to affect insurance companies, hospitals, really the entire spectrum. And that was not sharply sold off, but there's caution coming into this, right?
Is healthcare the bottom performer in the S&P since the election? Based on your chart here,
I have it. I have that. It's not on the chart, but this is figures I look at almost daily. Where what's the best performer of the day? What's the best performer of the week? And of course, the doc is taking a while to load. I'll get to it later.
This is me just throwing in random questions for you here.
Yeah, that's the Europe
getting you
stuff.
off your flow.
Yeah, other losers. Europe, developed markets, right? Developed foreign markets, emerging markets. Tariffs are going to be a huge headwind for emerging countries, right? And I think U.S. tariffs are going to sting more than Chinese tariffs, right? I think China is such a heavy exporter of goods, and specifically to the U.S. consumer, right? I think we all have to realize that if we raise tariffs, right, the talk is 60% tariffs on Chinese goods.
Yeah.
China's not going to sit on their hands. They're going to respond with some kind of tariffs of their own. And guess who imports to China? Tesla. So there's going to be some contradictory promises that have to give way to make room for some of the Trump backers, right?
I wouldn't be surprised if there's a carve out for Tesla. Now, that wouldn't be on the import to China side.
Correct. They might subsidize the loss of sales here.
Yeah. I guess what I'm saying is in the last when these tariffs started, when Trump's first term started, he implemented some tariffs on Chinese goods, which stayed, by the way. Biden didn't change those. He didn't really talk about that, but he kept them all. And so the one tech company that was able to receive a carve out is Apple. Tim Cook went to Washington, did the thing, had a presentation or whatever, and he was able to convince Trump at the time to receive a carve out for those tariffs. So Apple was able to continue to operate. with all their manufacturing happening overseas and have a carve out. And so Apple might be kind of on the good side of Trump versus some of these other tech companies. We don't know what his relationship is with Zuckerberg or, Satya or these other CEOs.
Yeah.
They, might not be so friendly. We do know that his relationship with Musk is obviously pretty strong.
Yeah. And to go back a few points is the healthcare was the worst performer of the quarter.
Thanks for that.
The quarter starting in October, but the market obviously prices in ahead of the election results, right? So everyone, at least in the betting markets, heavily favored Trump's, and it looks like that's the way traders reacted too.
A lot of news on that because the betting markets, they did turn out to be right. But I think I'm going to butcher this. It's 80 or 90. It's probably not 90%. It's probably 80. Let's call it 80% of people, don't quote me on this, who are in the betting markets are young men. Well, they're men, but then they skew younger.
Yeah, so it's definitely going to skew more towards how young men prefer to vote.
Well, based on how we now know the election results is young men across the country tended to vote Trump. And so if that's also the person that's in the betting markets, because a lot of young men are in the betting markets, that's what swung that so much. Yeah. All the point is I'm trying to make there is it did accurately predict the outcome, but it might not be the right barometer to look at because it is a relatively small subset of voters. It's not a representative of, both sides equally.
I didn't know you were going there. But yeah, expanding, the polls definitely got their fair share of attack, right? Because how inaccurate they were. Because it was a 50-50 proposition when we started the episode. It turned out to be a pretty major blowout, right? Harris lost by a pretty wide margin in terms of both the Electoral College and the popular vote.
Yeah.
The polls didn't capture that at all. And it showed a much tighter race. So the betting markets, the argument there is you place your money where your mouth is, you're definitely going to do your homework, right? The guy in France, right, who bet $40 million on Trump to win.
Yeah.
There was something that he was seeing because you're not going to put up $40 million on really iffy news sources, right? And I know the far right tends to look at alternative news sources. Are you willing to stake $40 million on that? Mm-hmm. Mm-hmm. Right. So the betting markets, yes, to Chris's point, predominantly young male, but yeah, they were right this time. Are they going to be right next time? Right. The goal of betting markets is to balance out bets on both sides because the house doesn't want to lose $40 million to one French bettor, right?
Yeah. Yeah.
So they had to find $40 million on the other side for Harris, right? So that's how betting markets tend to vacillate.
Yeah.
We did look at betting markets leading up to the election, and we were seeing that trend as well. But again, I think the whole point of the episode is what are you going to do to make changes investment wise to back a Trump trade? Again, none of what we're seeing plays out over the 4 years.
Right. Did you hit real estate? Just real estate here in your chart.
Real estate is the next worst. Real estate and materials are the next worst asset classes. Real estate really more of a function of higher interest rates, right? So the bond market was catching wind of a potential Trump win, and they were saying, well, Trump's going to bring hotter economic growth, therefore higher inflation. And that's another thing I wanted to address and maybe take a little bit of a tangent too, because whose fault was it? Because we saw stuff like, oh, they're lying. Inflation is not 2.7, it's 9%, right? That was a meme that I sent you a few days ago, right? Whose fault is it where pretty profound misunderstanding of what inflation is versus price level, where a journalist or media coverage will say inflation's this, and totally ignoring what price level is, and really not hitting on the emotional points of where people were really hurting, which was at the grocery store, right? Price of eggs were stable after this really large bump, but I always, in my mind, see, Well, eggs have doubled in price. So if you're saying 2.7, you're completely disconnected from my reality, or is the reverse where the guy's financially illiterate? I'm just going to say it, right? You say 9% inflation, but we know he's probably referring to price level. And
I have to tell you this. I was in a presentation yesterday, and the speaker was very good. And at one point, we were talking about inflation. And this was not an economic thing. This was like a strategy presentation. Okay, just for context, this is not like an economy thing. And he at one point kind of just said flippantly, like, inflation is like, I don't know, like 9 or like 12%. And I'm just like, what?
Yeah,
inflation's 2. Like, what? And okay, the guy was from Canada. He's from Calgary, so I'll give him that. But still,
Canadian math is like off from the world.
It's not 9 or 12% in Calgary either.
Yeah.
So I was just like, where are people getting this? And so anyway, I just, yeah.
Well, again, I saw a sign here locally in a conservative county, Harris, pretty effective, simple sign, completely wrong. Harris equals higher prices, Trump equals lower prices. One, they're implying that Trump's going to lower prices. Deflation is probably the last thing you want. I could tell you from a lot of history where the last time we saw severe deflation, Great Depression. You are at what cost do you want lower prices, right? And I'm talking broadly. Well, there's prices going down for sure in a lot of categories. But broadly, prices are still going up, but just much a slower clip.
Can we unpack that for a minute? Because prices have come down, right? So like,
and they continue to go down, yeah.
Eggs have come down a little bit. I've been complaining about cauliflower all year. It's come down. Certain things have actually come down. Your point about deflation is when everything comes down in lockstep, and that's bad. I think what that sign was saying is what's hurting me the most. Let's just assume it was grocery. What's hurting me the most in my family is grocery. I'm changing from beef to chicken and what, that type of conversation, right? Because I'm trying to get cheaper products. I think that sign was trying to point to that, which is, deflation of, say, grocery prices, but not of all prices. Accurate statement or inaccurate statement to your thoughts?
Again, it ignores a lot of big things, right? Housing affordability is a big one. Housing prices aren't going to come down, right? We saw mortgage rates drop prior to the election down to 5.5, which was awesome, right?
Oh, so good.
That lasted a few weeks, and then now it's back up to 7. That keeps people locked in their houses. They're not upgrading for a 7% mortgage. They're not leaving their current house at 2.5, 3
on mine. I'm not going anywhere.
Yeah, to upgrade. So housing's going to be an issue. I know we're going to build more, right? How are you going to do that if you're kicking out lots of immigrants or restricting immigrant labor? I can't stress this labor pool enough, where most construction workers are foreign born, right? How do we build housing if we're going to restrict so many input variables? And this housing won't go down. And I think that's one of the big things that they conveniently miss, because my election poster is going to be like 18 paragraphs long. You're going to have to walk up to it and read it. But I hate bumper sticker politics. That's probably what I'm saying, is there's a lot more nuance that you got to understand. But I also said that sign was pretty effective in terms of getting that message across, right?
So I was in another talk about a week ago, and this woman sort of unpacked the I don't remember what she, I'm going to say she was a communication expert, but I don't know what that means. So, but she unpacked the election and the trend of the election, and like when Biden dropped out and Harris came in, and like how did the polls get it so wrong, and she unpacked all of that. And one thing she said that resonated with me is that Trump's entire campaign was really around simplicity.
Correct.
And when you talk to a Trump supporter about what's his immigration policy, their answer is, what would you say?
They'll kick him out. Like I think it's like trying to figure out one sentence.
Build a wall.
Yeah.
We're going to build a wall. They're going to pay for it. Kick him out. Simple, right? when you talk to a Harris supporter, what's their immigration policy? Somebody might have a 3-paragraph answer to that.
Yeah,
right?
They've fallen asleep 2 sentences in.
Yes, exactly. And so her whole kind of spiel on that was that simplicity wins. And she actually went back over history and said, generally speaking, the candidate that is clearer and simpler and can connect with people tends to win. She talked about how George W. Bush had a way of doing that.
Yeah, Morgan Housel
nice,
says the best story wins.
Just a nice Texan.
Yeah.
Kind of like uncle and that kind of thing. Talked about how Obama was able to do that, right? And so you have these various examples on both sides that those clear and simple communicators are the ones that can resonate votes. So
yeah.
I agree with your statement that sign in your area is probably inaccurate. However, it's very simple.
It is.
Simplicity wins.
Yeah, and I thought it was effective. I knew better, but again, anyone who's driving by it was going to register in their mind, right?
Totally.
Yeah.
Let's keep rolling. I'm taking us down too many tangents here, so let's move to. This might have to be a 2-part.
Yeah, deregulation of banks. Again, this was simple to combat, right? Because we have insight of what a Trump administration looks like. All you have to do is go back to 2017 to 2021, right? So looking at the financial sector, again, the response is very different from that first 4 years now to then. Right, the financial sector was one of the worst performing sectors during Trump's years. So deregulation doesn't really go too far with banks if interest rates don't play ball, or the broader economy doesn't play ball that's favorable to banks. There's a lot more things than who's president there, right?
My thought with what the banks, so the banks jumped. Like J.P. Morgan jumped. Was it 5%?
9% in a day.
9%, and so it's like. For Tesla to jump 9% or Microsoft, like that whatever, they can sneeze and do that. Like these are tech companies, like they have crazy swings in earnings.
Not a bank, right?
Not a bank, right? Banks don't do that. These trade at such lower volatility than these big companies that are top of news. And so for that, J.P. Morgan jump, Goldman Sachs jump. I think what the market is saying is M&A activity could go up if regulation comes down, FTC switches out, and that kind of thing. Because if interest rates stay higher, that's probably not good for lending. It's good for savings, but it's not good for lending. Your thoughts?
So everyone knows M&A means mergers and acquisitions. This administration has been pretty tough on companies buying other companies.
Meaning Lean-Econ at the FTC.
Lean-Econ specifically, which we'll talk about. Banks are a big conduit for that kind of deal making, where I'm Goldman. I'm going to link 2 companies up together. I'm going to collect a 10% fee. I'm just throwing out a random number.
Yeah.
That kind of deal making has definitely shrunk under the Biden administration to the point where it's like at historical lows, right? And to unlock it, I don't know if that really changes from the transition from Obama to Trump's first term, from Biden to Trump's second term. I don't see a material difference other than the FTC. I think there's just interest rates will have a bigger impact. Interest rates are still pretty restrictive at 4.25%.
Yeah.
Because if you're buying another company, you're borrowing money. And if it's cheaper to borrow money, you're going to buy a lot more companies. So it's just very simple math.
This is the thing, right? Is it because of policy and say the FTC is restrictive, or is it because of interest rates?
Yeah.
Presidents, as we say, presidents take way too much credit and receive way too much blame for general stock market, performance, right? But we won't know until we know. And rear view mirror driving is, more accurate.
Yeah. So is there going to be deal making frenzy? Maybe.
Yeah.
Right. Do we want a return of SPACs in 2021? I would probably say no, right? Because I can name maybe a handful of people that benefited from that craze.
Well, okay. Counterpoint, if you own stocks and you're buying those SPACs, you probably didn't do very well. But if you own the private equity side, you love it because you're able to get out.
If you were at the ground level of it, yeah. There's actually quite a few funds that we know about that benefit from that SPAC craze.
Exactly, because it cashed out investors and then the money can go back into the system. And so, there's... Anyway.
All right. Buyer beware, all done. Again, don't get over optimistic. And on the flip side, don't get overly pessimistic, right? So both Trump's first years and Biden's first years, right? We have a return of 67% cumulative in the S&P for Trump. And Biden so far is up 50%. Very neck and neck.
Yeah,
but
same.
Yeah. Outside of a few years or a few cycles, the return stream for both have been strong, right? You made quite a bit of money in both under Biden and Trump. And I think we've been saying...
tailwinds.
Yeah, a lot of tailwinds. I think we've been saying that really consistently since we started this election cycle of podcast episodes, right?
Yeah.
So 2 months after the election, 2016, Trump was up net of 6.16%, Biden up 14.33% after being elected. Remember, two very different world environments, right?
That's interesting.
November 4th, 2020, still very much steeped in COVID and lockdowns. In 2016, Trump inherited a pretty strong rebound from those Obama years, from the great financial crisis. So if you're investing high, you're most likely not going to get high returns from already a high buying price point, right? But if you're investing low, like in COVID, I know we were still rebounding that year, you're most likely going to get high returns because of the snapback, right? And you notice I didn't mention any president's names or policies that even affected that.
So then this bump here, maybe the second Trump bump, we do think that it's kind of related to policy. No?
The expectation, policy changes. Yeah.
So that is interesting. So in this instance, the market is saying the president will have some influence on that.
Tax cuts is probably going to be the biggest tailwind for that.
Interesting. Okay. All right. Let's go to this tax analysis. This is interesting. We'll shift
I don't know
to
if I have
TCJA.
time for this, but let's kind of gloss over if it warrants a second crack at it. I think we do it in a few weeks.
So this table just talks through the tax area, things like individual tax brackets, standard deduction, the SALT deduction cap, and so on, and then the likelihood of changes and what those possible changes are. And this is really all around the extension of the TCJA. So as I said in the beginning, the Tax Cuts and Jobs Act, which was implemented under Trump's first term, is set to expire at the end of 2025. And what that will do predominantly is roll back those Trump-era tax cuts and bring everybody's individual tax brackets back to the prior rates. So you remember 39.6 being the top bracket for so long, and then it came down to 37. And there was a host of different kind of changes in the brackets. And so one of the things that the market started pricing in was the anticipation of TCJA getting extended under Trump, whereas under Harris, that was likely not to happen. And so just a quick list of what the likelihood of changes are. So things like individual tax brackets, standard deduction, and estate tax limits, pretty low. Generally speaking,
they're going to stay as is.
It's thought those stay about as is. Things in the medium category, itemized deductions, child tax credit, AMT, other business deductions, tax cuts, clean energy credits. So there's talk of doing things like removing or eliminating clean energy credits for solar and vehicles and that kind of stuff. There's talks about increasing child tax credits and reducing the phase-out threshold, itemized deductions, reintroducing investment fee deductions, and adding in auto loan interest deduction. That one's pretty interesting.
Yeah.
And a host of other things, AMT, reduce the AMT exemption. And then possibly the biggest one that's on the radar, I think probably the most complained about thing, is this SALT cap. The SALT cap is the state and local tax cap. So this is if I live in, say, New York or California, and I pay property tax and other things, I am capped at $10,000 of that. So if I pay $20,000 in property tax, I'm capped at $10,000. This is true anywhere, but it's more impactful in these states that have high income tax because, of course, that tax onto the top of federal, and then you can only deduct 10,000 as a cap versus maybe 20 or 30. So this is on the high area. This is the only high area on this whole list. And the thought is raising the limit or indexing it to inflation or doubling it for joint filers or maybe even eliminating it fully. That would probably be a huge win for New York and California, but really kind of across the nation for high taxpayers and high income earners. It could be a win if that happens. So that's the only thing that is kind of high on this list.
Yeah, and I think it'd be an important debate point, right? Because everyone's heading into this election has talked about how bad the debt has grown and is growing, and offering more tax cuts, as much as I would personally welcome them, it doesn't really help address the debt, right?
So how your point,
Elon comes in.
Yeah, yep, we'll get there next. So your point is the first round of tax cuts, the TCJA was an unfunded tax cut. So that means that tax revenue lowered without a offsetting expense lowering.
Yeah.
So government revenues went down, expenses did not. So that's called an unfunded tax cut. And so that's part of the problem with that is it puts the U.S. further into a deficit. Now cue up the government, the Department of Government Efficiency. This has been in the news. Talk about this, please.
Yeah. Uniquely, the acronym spells Doge. So Dogecoin definitely popped when this was announced, but Vivek Ramaswamy and Elon Musk will be in charge, and Elon's goal is to cut $2 trillion in the annual budget. $2 trillion with a T, trillion. That's all capital.
And why $2 trillion?
Because that's the current budget deficit that we're running under 2024 forecasted.
Yeah.
But again, it is on par. If you strip out COVID stimulus checks, it is on par with the funding gap since Tax Cuts and Jobs Act has been enacted. So maybe we'll finally address the funding gap. But what's going to get cut? I think we went over the list of things that will get cut. You cut off the bottom 6 expenditures in the U.S., you're still about $1 trillion short. So some steep, scary cuts might be coming if they're serious about it. But again, this might be brushed under the rug where I think through the whole host of administrations, we're like, well, we got to address the debt. There's probably very little interest to do it because Congress has to vote on this. Congress, unlike Trump, need to get voted back into Congress in a few years, and they don't want to risk political suicide because what I'm really implying is Medicare and Social Security would have to be at least revisited if they're serious about cutting $2 trillion out of the budget.
I think this would be really interesting to watch in the next, year, 6 months, year. Like what is going to be proposed to be cut, and is there offsetting potential revenue increases? I know that Trump has long said and believed we can grow our way out of this deficit. If we can grow the economy faster, we can increase revenues faster, and that will fix the the deficit. Yep. We'll see what this plan ultimately is and what of it gets approved. I think this Department of Government Efficiency will be really high up on the news, and it'll be interesting to see what is on the chopping block. So
yeah, you get a lot of attention, but the votes won't. Again, anyone who's risking Social Security cuts is signing up for. Yeah, they're signing up for political suicide. They will never get another term.
I'm in the camp of I think they should just change the claim rate or change the taxes for anyone under 40 or something like that, 45. So
yeah,
that would fix the program. I mean, I think that's a pretty obvious reset. Yeah. We have just a couple minutes. You want to talk tariffs quickly? Is that kind of the next hot button item?
Yeah. Tariffs, inflation, right? So it's important to realize if we do enact tariffs, we're going to get counter tariffs, right? So anything we import is going to be a lot more expensive, and anyone who buys things from Target, Walmart, they're going to see increased prices. We did see tariffs before, so we came along just fine.
Yeah.
Tariffs do change price level. It's like a one-time inflation jump, right? But the cost of everything will be at a higher level but inflation will be pretty steady unless we have some other factor coming in. But the thing is, the assumption of inflation going up is probably misguided. Yes, economists say running the economy hotter will reignite inflation, but I think the underlying issue with inflation was supply restriction.
Mm-hmm.
You shut down an entire global economy, it just doesn't light up that quick, right?
Mm-hmm. Mm-hmm.
And we're talking about how long it took to get TVs, couches, all that stuff. Now go to a furniture store, you get a couch within days. That will not really reignite inflation from the goods side, and then from the service side, right? People who are providing services were paying wholesale prices that have gone up. I don't see the wholesale prices going up for barbers, plumbers, things like that, where I think the fear of inflation here in this scenario is overblown.
All right, so we're in the market for a chair. So we're going to swing by, like Pottery Barn or whatever. So is your recommendation to buy that like this weekend? Do you think I'm going to get a better price now, or do you think
unless it's made in China, it's going to be higher?
I think a lot of the stuff comes from all over the world. Like they kind of pride themselves on like using craft manufacturers from Indonesia and Turkey and these kinds of things, right? So as long as it's not made in China, you're saying I'm safe. Okay.
For now.
All right,
again, the thing, the 60% that we quoted, I think that's a starting point for negotiations. I don't think we'll see that. Yeah. Goldman does predict like a 10% tariff as a base case. I think we could absorb that, and we probably wouldn't feel the sting of higher prices there.
Mm-hmm. Mm-hmm. Okay. That was good. That was a rapid fire there.
Yeah, we probably have to continue this to
totally
61B.
I love it. Thanks everybody for tuning in today. That was a fun conversation and hopefully a really helpful download for all of you on just what's transpired in the last couple of weeks here in markets, what's the market pricing in, and just hopefully something there that's insightful for you.
Yeah.
All right, everybody. Thanks so much. Talk soon.
All right. Bye.